So what happens when one company decides it wants to own a massive piece of Ethereum? We're talking about a company called BitMine, and their ambition is absolutely staggering. The big question is, are they building an empire that's going to make Ethereum stronger, or are they a threat to its core promise of decentralization? Let's get into it.
So where does a story like this even begin? Well, like a lot of things in the crypto world, it starts with a huge and very quiet transaction. A deal that happened completely behind the scenes, but involves some of the most important names in the entire ecosystem. On one side of this deal, you had the seller, the Ethereum Foundation. Now, this isn't just any old company, right? This is the nonprofit at the very heart of Ethereum, the group that guides its research and development. So, yeah, when the foundation makes a move, people pay attention.
And the move was a big one. They sold 5,000 ETH for just over $10.2 million. A sale of that size, coming directly from the foundation, immediately makes you wonder, who in the world was on the other side of a deal that massive?
But here's the thing, this wasn't a sale on a public exchange like you or I would use. This was an over-the-counter deal, or an OTC deal. That means it was a private sale, directly between the foundation and the buyer. No public record. And that secrecy, it was completely by design.
Why so secretive? Well, the foundation had learned a lesson the hard way back in September 2025. They made a big public sale, and it kind of freaked everybody out, sparking fears of a price crash. So this time, they listened to the community. The private deal was a direct response to that, a smart way to manage their funds without spooking the entire market.
Okay, so we know why the deal was done on the quiet. Now it's time for the big reveal. Who was the buyer? And this isn't just any old investor. We're talking about a company with a goal so unbelievably bold, they call it the alchemy of 5%. The buyer of all that ETH was a company called BitMine Immersion Technologies, stock ticker BMNR. And let me be clear, this is not some small venture fund. It's a publicly traded company that has been on one of the most aggressive buying sprees the crypto world has ever witnessed.
And this is their grand ambition. This is not just about adding a few coins to the balance sheet. BitMine has publicly stated their long-term mission is to acquire 5% of the entire supply of Ethereum. Just let that sink in for a second. A single public company wants to own 1/20th of the whole network. It's mind-blowing. And if you want to see just how dominant they are, this chart says it all. See that giant tower on the left? That's BitMain's treasury, holding around 4.5 million ETH. Now look at the next largest competitor. It's barely a fifth of the size. They're not just the biggest public holder of ETH. They are in a completely different league.
So you have to ask yourself, who comes up with a plan this bold? Who has the vision and the connections to even try something like this? Well, the answer might surprise you. It's not some crypto-native founder. It's a Wall Street heavyweight.
Meet Tom Lee, the chairman of BitMine. Just listening to his words, you can feel the conviction. He sees a market downturn not as a reason to panic, but as an opportunity. He calls it the final stages of a mini crypto winter. That's the cool, calculated thinking of a real market veteran.
And his background explains everything. Before co-founding the big-time research firm Fundstrat, Tom Lee was the chief equity strategist at JP Morgan. That's not just a fancy title. It means he understands how institutional money moves, how markets really work, at a level most people in crypto can only dream of. He's bringing a Wall Street playbook to a decentralized world.
But look, a huge vision is one thing. Actually pulling it off is something else entirely. So how exactly is BitMine planning to make this alchemy of 5% a reality? Let's break down their actual strategy.
What's really fascinating is that BitMine didn't just pop up overnight. They were founded way back in 1995. For years, they were focused on eco-friendly Bitcoin mining. The huge change came in July 2025 when they raised $250 million and completely pivoted to becoming an ETH treasury. They brought in a new CEO, and they're already planning their next big move, getting directly involved in securing the network.
And this really reveals their true strategy. BitMain isn't just hoarding ETH like a digital dragon on a pile of gold. By being a publicly traded company, BMNR, they are positioning themselves as the perfect, easy-to-use bridge for traditional finance to pour money into the decentralized world.
And you want to know if that strategy is working? Oh yeah. BitMine stock trades an average of $1.6 billion a day. That makes it one of the most liquid stocks out there. So for a huge institution like a pension fund that wants $1 billion of exposure to ETH, they can just buy BMNR stock. It's simple,
It's regulated, and it doesn't crash the crypto market. It's a gateway for the whales. But just holding the asset isn't the end game for them. Not even close. Their next move is something called Maven, the Made in America Validator Network. This is their plan to use their mountain of ETH to get into the staking game, to actively participate in validating transactions and securing the Ethereum network. It's a huge shift from being a passive holder to being part of the core infrastructure.
And this is where we get to the core conflict, the central dilemma of this whole story. When you have one single centralized company accumulating so much ETH and planning to run so much of the network, it raises some really tough questions for a system that's supposed to be all about decentralization.
I mean, just look at the two sides. On one hand, you have the promise of Ethereum, a decentralized world computer, power in the hands of the many, no single point of failure. That's the whole point. And on the other hand, you have BitMine's reality, by far the biggest single holder, creating a massive concentration of influence that seems to go against that entire philosophy.
So how does Bitmain's leadership square this circle? Well, they frame it as something much bigger than just an investment. For them, this is a fundamental, all-in bet on the future of the entire global financial system. Their core belief, the one driving everything, is that Ethereum isn't just another crypto. They see it as the future base layer, the actual backbone that a whole new era of global finance is going to be built on top of. And every single move they make is designed to cash in on that belief. They're making a two-part bet on Ethereum's success. First, by owning a huge chunk of it, and second, by building the infrastructure to become a core part of how it actually runs. Which leaves us with one final provocative question. Is BitMine the engine that's finally going to bring all the big institutional money into Ethereum and take it mainstream? Or, with its relentless buying, is it becoming a de facto central bank, undermining the very idea of decentralization that made Ethereum so revolutionary to begin with? That's the multi-billion-dollar question at the heart of this whole thing.